Whether you like to play slots or table games at a casino, handicap the horses, or take a chance you'll win $1 billion on the state lottery, gambling winnings create taxable income. But there are ways to minimize the tax impact of these winnings. I'm the Tax Geek, and here are gambling winnings and losses oversimplified. As late as the 1970s, there was exactly one state with legalized casino gambling. Today, between states that have permitted commercial casino gambling and casinos on Indian reservations, you'll find gambling casinos in 34 states. Since the first state lottery was established in New Hampshire in 1964, lotteries have now spread to 44 states, and states have banded together to create multi-state lotteries such as Mega Millions and Powerball, with prizes in the tens or hundreds of millions of dollars. All gambling winnings, whether legal or illegal, are considered to be taxable income by the IRS. Winners are expected to declare their winnings on line 8B of page 1 of Schedule 1, which then shows up on line 8 of Form 1040. In addition to cash winnings, the fair market value of any comps you receive from a casino, such as rooms, meals, shows, etc., and any non-cash winnings are also reportable as income. Depending on how much you win at casino gambling, a state lottery, or pari-mutuel racing, the casino, state, or racetrack may issue you a W-2G. W-2Gs are issued for winnings over $1,200 for bingo or slots, $1,500 for keno, $5,000 for poker tournaments, and $600 for all other gambling winnings. Let's take a look at what's on this form. Like most tax reporting forms, the left side of the form shows information on the payer and the recipient, called the winner. The winner's Social Security number is shown in box 9. Boxes 1 through 4 show the amount of winnings, the date won, the type of wager or game, and any federal income tax withheld. Much of the time, income tax withholding on gambling winnings is voluntary. Federal income tax withholding at a rate of 24% is required for winnings over $5,000 from sweepstakes, state lotteries, and betting pools. Boxes 5 through 8 give detailed information about the winning transaction and is usually not important in figuring taxable income. To be issued a W-2G, a winner usually has to provide 2 forms of identification, and this information is shown in boxes 11 and 12. Finally, boxes 13 through 18 give income and withholding information for state and local taxes. Unlike any other tax reporting form, a W-2G requires a signature from the winner certifying the information that is given to the payer is correct. If you have gambling winnings, you can deduct gambling losses from your taxable income to potentially reduce your tax liability from the winnings. Gambling losses are reported in the Other Itemized Deductions section of a Schedule A. To be clear, you cannot simply subtract your losses from your winnings and report the net amount. Winnings must be declared in full and losses deducted on a Schedule A. You may deduct losses only up to the extent of your winnings. The IRS will only accept detailed proof of your losses, including the amount of the loss, the date of the loss, and where and how you incurred the loss. You don't need to provide proof of losses with the return, but it should be kept in case the return is audited. Most casinos have some sort of players club or rewards program which can track all your winnings and losses and provide you with a detailed report of your gambling activity. If you purchase lottery tickets or bet on sports or races, keep the losing betting slips or tickets. And no, you can't collect them from friends and family. Only tickets you purchased in the year you had the win count toward your losses. You can only deduct gambling losses if you would otherwise be able to itemize deductions. If your itemizable expenses, including your allowable gambling losses, do not exceed your standard deduction, you would not benefit by deducting them. As an example, Marty and Edward went to the Foxwoods Casino and Marty won $6,000 playing slots, for which he was issued a W-2G. At the end of the year, they received their rewards program statement, which shows they spent $8,500 to win the $6,000. Their other itemizable expenses are $3,250 in state income tax, $2,725 in property tax, and $8,431 in mortgage interest on their home. For 2023, Marty and Edward's standard deduction is $27,700. Their total itemizable expenses, including the allowable gambling losses, comes to $20,414. So, despite the losses, they would still benefit more by taking the standard deduction. And that is the oversimplified rundown on gambling winnings and losses. As usual, there are links to additional information and resources in the video description. Please like and subscribe if you found this video informative. Please share this video with anyone who would find it useful. And of course, your questions, comments, and suggestions are always welcome in the comment space below. Thanks for watching, and I'll be back soon with more of your taxes oversimplified.